Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. I would like to request my viewers to subscribe my channel and to see the playlist section of the channel where I have uploaded lectures on accounts, costing, financial management and management accounting. Today I am going to discuss about labor variance. This is lecture number 2 on labor variance and lecture 8 on standard costing. You can see the earlier lectures on standard costing in the playlist section of the channel. Please give your valuable feedback so that I can develop the channel for the benefits of the students of commerce. The standard output of production ABY is 25 units per hour in manufacturing department of STR Limited employing 100 workers. The standard wages rate per labor hour is rupees 30. In a 42-hour week of September 2021, the department produced 1040 units of ABY despite 5% of the time paid was lost due to an abnormal reason. The hourly wage rate actually paid were rupees 31, rupees 30 and rupees 28.50 respectively to 10, 30 and 60 of the workers. Based on the above information, calculate labor variances. So when we are solving a problem on labor variances, we have to first find out the following parameters. So number 1 is standard hour, so which is denoted by SH. So standard hour for actual production. So this is equal to actual production divided by standard output per hour. So actually standard hour for actual production is calculated by actual production divided by standard output per hour. But there are 100 workers, so we have to multiply this factor by number of workers. So it is given that actual production is 1040 units and standard output per hour, this is per labor or per worker, right? So standard output per hour per labor, it is given as 25 units and there are 100 workers, so we are multiplying it by 100. So standard hour is 25 units per hour. It is given as 25 units per hour. So 1040 units is the actual production. Standard output per hour per labor is given as 25 units per hour and we are multiplying it by number of workers. So this comes to 4160 hours. Actual production by standard output per hour per labor, this is basically standard hour per worker into number of workers. So standard hour required per worker is 41.60, that is 1040 units by 25 units per hour, and then we are multiplying this factor by 100 because there are 100 number of workers. So standard hour per worker into number of workers. So the next parameter is standard rate, that is SR. So this is standard rate. So standard rate is given as rupees 30 per hour. Next is actual hours. So actual AH, this is basically actual hours paid for. This is basically actual hours paid. 42 hours in a week and there are 100 workers. So this is 4200 hours. So actual hours paid is 4200 hours. The fourth parameter is actual rate, AR. This is actual rate. Now we have three rate. So for worker type 1, the rate is rupees 31 per hour. Then worker type 2, the rate is rupees 30 per hour. And worker type 3, we have a rate of 28 rupees 50 per hour. Then the next parameter you need to find is actual hours worked. This is actual hours worked. Why we are calculating this actual hours worked? Because there is an idle time. Because there is some idle time. Some time was lost and it is considered as abnormal loss. So we have to find out what is the actual hours worked. Now this is equal to 4,200 hours. This is the actual hours paid, and 5% there was a loss. So 95% of the actual hours the workers have worked. So this is 3,990 hours. So actual hours worked is 3,990 hours. And the sixth parameter is idle time. So idle time is the difference of actual hours paid and actual hours worked. So actual hours paid is 4,200 and actual hours worked is 3,990. So your idle time is 290 hours. Or alternatively, you can say 4,200 into 5%. So 210 hours. So these are the 6 parameters that we have calculated for calculating the labor variances. Number 1 is standard hour, then standard rate, then actual hours paid, then actual rate, then actual hours worked, and idle time. Now we will find out the different variances under labor cost variance. It is given that there were 10 type 1 workers, then we have 30 type 2 workers and 60 type 3 workers. So we have 10 type 1 workers, 30 type 2 workers and 60 type 3 workers. So first labor cost variance we have to calculate. So labor cost variance. So labor cost variance is calculated by the formula standard hour into standard rate minus actual hours into actual rate. So standard hour is 4160 into 30, that we have already calculated. See, standard hour is 4160 and standard rate is rupees 30. So I have written here 4160 into 30. Now actual hours. So there are 10 type 1 worker, 30 type 2 worker and 60 type 3 worker. So 42 into 10. This is the weekly hours of work and there are 10 workers. So I have multiplied 42 into 10 into the rate. The rate or the actual rate for type 1 worker is 31. Then 42 into 30 into 30. This is the weekly working time or weekly hours. Then 30 is the type 2 number of workers and 30 is the rate. This is actual rate. Then we have 42 into 60 into 28.50. So this is 1,24,800 minus 13,020 plus 37,800 plus 71,820. So you will get 1,24,800 minus 1,22,640. So your labor cost variance is 2,160 favorable. Since your standard cost is more than actual cost, so I have written here F, that is favorable. Number 2 is labor rate variance. Labor rate variance is calculated by the formula standard rate minus actual rate into actual hours. So you have 3 type of workers. type 1 worker, the first for type 1 worker, the standard rate is 30 for all the 3 type of worker, but the actual rate for type 1 worker is 31 and actual hour is 42 into 10. 42 is the number of works, 42 is the number of hours worked in a week, and 10 is the number of type 1 workers. Then for type 2 worker, the rate is 30 minus 30 into 42 into 30. So 30 is the type 2 number of worker. And for type 3 worker, this is 30 minus 28.5 into 42 into 60. So for type 1 worker, you will get 420 adverse, then this is nil, and this will be 3780 favorable. So labor rate variance is rupees 3360 favorable. The third variance that we have to calculate is labor efficiency variance. Labor efficiency variance is calculated by the formula standard hour minus actual hours worked into standard rate. So this is standard hour we have calculated 4160. So I am writing here 4160, and actual hours worked is 3990. So I am writing here 3990 and standard rate is 30. So you have the labor efficiency variance as 5100 favorable. So both the labor rate variance, you have a favorable variance, that is 3360, that is rate is favorable, and efficiency is also, we are getting a favorable variance 5100. So the standard cost is more than the actual cost. And the fourth one we have to calculate, that is labor idle time variance. So labor idle time variance is calculated as idle time into standard rate or actual hours paid for minus actual hours worked into standard rate. So you have already calculated idle time is 210 hours and standard rate is 30. So your idle time variance is rupees 6300 adverse. So these are the 4 variances we have to calculate under labor variance: labor cost variance, then labor rate variance, labor efficiency variance, and labor idle time variance. Thank you. Thanks for watching the lecture.